Hey guys, welcome to another update on the $0 to $100,000 stock trading challenge on Robinhood. Just giving an update since the last time I recorded, the market was selling off and I was losing quite a bit of money. And so I was down to about $14,000 and now I'm back up to $19,600. So since the market's been recovering, I have managed to recover about $5,000 back since the last time I recorded. And since the last time I recorded, I have put a little bit of money into this fund as well, about $1,000 since the last time I made the video. So we're up about $5,000, and then of course $1,000 of that was from my own money. So made a little bit of back from trading stocks and from just investments. And so now we're back up to nearly $20,000, which is really close to the first milestone of $25,000. And that of course is going to get us closer to the final 100 grand in this account. So I just wanted to be transparent with you guys about what ETFs and stocks I have been buying. This of course is not financial advice in any way. I'm not recommending any of these. And if you would like to go look into them, that's great, but I'm not recommending these in any way. So the first one is going to be XLK. This is a technology select ETF. So it tracks some of the technology stocks within the S&P 500 and kind of collects them all together and makes it a tradable fund. So I'm actually flat on this one. 152 is the average cost and the price that it's at right now is 152.50. The next one is going to be Target. So I actually bought this one when it was pretty high. The all-time high I think was around 265. My average cost was at about 245. Brought that average cost down to about 238 and now we're at 233. So now we're only down about 2%. So Target is about 20% of my portfolio and down 2%. And so once I break even, once the stock goes above that 238 average cost, then I'll sell out a good amount of my shares and put them into more diversified funds. So initially I was actually trying to make a quick swing trade on Target. That's why there's about 6 grand in here. I was going to make, a 15% swing trade return. But of course the market dipped. And so I ended up bag holding Target for about 2 or 3 months. And so, once it, like I said, once it crosses that average cost of 238, once it gets into the 240s, 250s range, that's when I'll sell out about 3, maybe even 4 grand out of Target and put it into more diversified funds. So this next one's actually kind of interesting. So this is SCHG. It's a large cap growth ETF. And I had a good amount of money in here. I had about 5 or 6 grand in this fund. But what's interesting is Robinhood has, the Robinhood Gold where you pay 3% interest and you can borrow a certain amount. Well, Robinhood won't let you borrow too much if your account is too risky, too high volatility. And so when this ETF split, did a 2-for-1 split a couple weeks ago, so it went from 150 to 70. And once it split, the volatility went up to high. Right now it's at medium, but at one point it was at high. So I actually, to be safe, I sold some shares, put it into a different low volatility ETF just to be safe, just so I didn't have to have any leverage taken away from me. And I don't really know why Robinhood does that. It deems certain stocks as high or low volatility based on certain criteria. I don't really know what that is, but maybe one of you in the comments can explain it. So I went from having about $5,000 or $6,000 in here to now around 2 grand. But once it drops down to low volatility, I'll be buying a few more shares back. So this next one I want to mention is Costco, probably one of the best stocks you can invest in. Over the past 15 or 20 years, it's just gradually been increasing in value. It pays a dividend, and overall, I think it's just an amazing company with great values and great brand loyalty. Integris Health is another pretty decent stock to hold on to long term. It's down about 15% over the past 3 months, but I'm planning on holding this one for about 3 to 5 years. So hopefully by then it will see solid returns year over year. So another stock worth mentioning is Arthur J. Gallagher, or AJG. Just an awesome stock that actually recovered incredibly well from the past correction, this last correction. It's up about 20% this month and pays a dividend and has seen just phenomenal returns year over year. It's seen about a 13 to 20% return on average over the past 5 years. So this is a stock that I actually wish I had more shares in, but will continue to buy more as time goes on. And I do have a good blend between low risk, low volatility ETFs such as VTI and VOO, the ones that the financial experts recommend. And then I do own a couple shares of QLD, which is a little bit higher risk. It's 2 times leveraged. So I do have a good blend between those 3 ETFs. And then I do own a good amount of monthly dividend paying stocks such as Stag Industrial, SPHD, AGNC, and these help to kind of offset the payment I have on Robinhood Gold. So I'm paying about $20, $25 a month, and then these monthly dividend paying funds kind of offset that cost. Let me know if you have any questions about my portfolio and about my trades and about what I'm investing in, and I will hopefully catch you on the next update. See ya.